Hi, good afternoon. Thank you so much for joining us today about the value of and savings of non-insured benefits and your 2021 benefit strategy. My name is Bruce Bernstein. I'm Vice President of Strategic Markets for Carrington International Corporation. We really appreciate you taking the time to join us today. We're really excited to discuss more about these products, services, and the changing landscape of employee benefits in the new year. We are just a minute after our start time. We do have more attendees joining and rolling in as I'm speaking here. So we're going to give them one more minute, and then myself and Lori Wilkinson will be right back with you to begin our conversation. Thanks, and we'll talk to you very soon. All right, good afternoon, everyone. This is Bruce Bernstein again. We really appreciate you taking the time to join us today. We're going to talk about the value and savings of non-insurance benefits and how those can enhance your 2021 benefit strategy. I am Bruce Bernstein with Carrington International Corporation and really excited to talk about these benefit programs that I've been involved with for the last 2 decades and how important, how valuable they are, and when and where they work well with employee benefits for all of you consultants and any HR benefit decision makers that have joined us today. I'm very excited to have Lori Wilkinson, the Vice President of Brown & Brown Insurance and the Director of Non-Insurance Benefits for Brown & Brown, on the phone with us today to impart her wisdom and knowledge of she's spent quite a bit of time over the last decade integrating these savings plans into her offering with her clients and has a lot of good information for us about the best practices to make these work the best for employees and the employers from a cost perspective. What is valuable? Lori brings more than 25 years of national and international experience through her time with Brown & Brown Insurance of Nevada. She's also held other positions with some of the top Fortune 100 companies and has a strong background in benefits and their place in the market. Lori, thanks so much for your time today. We're really excited to have you here. What we're going to cover are these topics here. What is a savings plan? What do we mean by non-insured savings plan? There are many terms that have been used, and it really kind of depends on who the audience is, what term fits the best. And with the employer space, it's really important that we use that term non-insured to diversify and to separate out what types of products we're talking about as opposed to them being insurance. That's also part of the regulation of these products, is making sure that employees and employers and consumers don't think of these products as the kind that are providing reimbursement like an insurance product was. We're also going to talk about how to find the gaps where these products fit best and to relay the value of the savings and illustrate that for your customers. We're going to talk about how it impacts you as a consultant or as a benefits broker from a revenue perspective. You know, the commission, the fees that are involved in providing these products will really provide a diversified income and revenue stream for your firm. And then differentiate yourself, because there are many brokers and consultants that really haven't found places to include these products, or for whatever reason they aren't as involved in providing these programs. So what are these savings plans? What are we even talking about, and how are they different from traditional insurance products? So savings plans, as we like to call them, and again, using non-insurance savings plans to help really differentiate them from insurance, is how we describe them. And what they provide is, for a membership fee, sometimes monthly, oftentimes annually, the member can then choose from a network of participating providers, and they'll know when they go in the door, in most cases where there's a network, what fees that they will pay on a per treatment basis. So very similar to what we see, for instance, if we're talking about dental insurance or vision, where there's a fee for service arrangement on a PPO basis. It's very similar to that. How it's different, though, is while there is a set negotiated discounted rate with the providers performing the treatment, rather than the provider submitting a claim to an insurance company and getting reimbursed from the insurance, instead the patient member and the provider both have that fee schedule and those rates in front of them. And so it's a direct relationship, and the patient pays that fee at the time of service. So think of it as Costco for healthcare, for instance. There's this value in paying a membership fee to get wholesale pricing. And that's exactly what we've created and been doing for the last few decades with our national networks at Carrington and our partner networks with our large portfolio. Insurance plans provide that covered benefit, and the insurer pays a portion, and if there's a leftover, there's a copay with the member. But in this case, those fees are clearly transparent to all parties, so there's no question about, is this being charged correctly, and there's no need for claims to be processed and flow through. Carrington's known as a dental company. That's the cornerstone of what we do, and we would say that dental has really been in the forefront of these non-insurance savings plans. But hand in hand, just like on the insured side, vision is very popular. That dental vision plus prescription discounts is our most popular product at Carrington, and I would argue that combination traditionally over the years and historically has been the strongest combination. Hearing plans have really grown, especially in the Medicare and senior markets, to provide significant savings on the cost of either surgery or aids that can be placed. And then alternative care like chiropractic, acupuncture, fitness gyms sometimes fall into that alternative healthcare angle, have become more popular. We're seeing a lot of interest in the pet care side, surprisingly, not just on the individual market, but we have many employer groups now that are including a pet discount plan as an employee benefit in the US, and even more so popular abroad. Legal plans you may have heard of, and sometimes those provide online resources where you can create your own documents and wills, and then they also typically come with a network of attorneys and law firms who have pre-negotiated discounts, so strong savings there. And then travel, shopping, dining, more of those lifestyle everyday uses can also be included to round out a nice product offering. The value of these non-insured discount products is the affordability. Unlike, and because it's not an insurance plan and there's no risk involved, an insurance premium is much higher than a savings plan membership fee many times about a third of what a premium is, depending on the product. These can stand alone as their own. They're so valuable and they provide so much savings that many times when you put pen to paper, depending on the treatment that's needed for an employee, a discount savings plan could actually save the patient more than insurance when you factor in premiums, waiting periods, deductibles, and maximums that exist on an insured side, which none of those things exist on a savings plan. So if a patient needs, say on the dental side, a deeper cleaning as opposed to the regular, maybe they have periodontal disease, they can have as many teeth cleanings as they need in a year, and they'll never max out, if you will, or be denied a third or a fourth, depending on their treatment that's necessary. So those are great benefits of the plans. And of course, we continue to build our networks out nationally, and it makes it perfect for those employees who travel or those that move. They can take that portably with them and find a provider in their new place. There aren't any age restrictions. We're not doing any sort of background check or medical exams for savings programs, again, because there's no risk. And another great thing about savings plans is that you can enroll at any point in the year. It's not contained to open enrollment periods. And so when we talk a little bit later about how you can use a savings plan in conjunction with an insurance plan, that becomes really important, that you can pick up that savings plan any time of the year. You don't have to wait until open enrollment or for a qualifying life experience to be able to enroll. And then we're very transparent in the savings industry with those fee schedules. Like I mentioned earlier, fee schedules meaning what the employee pays for the treatment. You can also use HSAs, FSAs, and HRAs to pay for the treatment that's being performed. So it's really simple to roll these into just about anyone. Lori, I want you to join the conversation here with me. You know, what I've been fascinated with you is your knowledge of this industry, and it's because it seems like you've been offering these programs to your employer clients for quite some time. How did you identify that these discount savings plans would be a good fit for your customers, you know, from your consultant perspective? And are they being used to offer more traditional insurance options as well?
Yeah, thanks, Bruce, and hi to everybody on the call today. We appreciate you joining us. Yeah, as you know, Bruce, I have just a great love for non-insurance benefits, as I've been selling them for almost 14 years now. And one of the things that I learned from a previous career, I spent a lot of time in consumer goods and with the Coca-Cola company. And one of the things that my key learnings during my time there is to look for ways to differentiate yourself and to provide value and to create wins for everybody. And so that's one of the reasons why I love these benefits so much. And so when I spend time with my customers, as we all do, one of the things that I first and foremost do is I really spend time getting underneath what are their wants and needs and what sort of challenges are they facing. You know, how are they supporting, you know, their full-time employees, their part-time employees, their you know, any other, you know, kind of benefit or member who might not be eligible for benefits, but that they want to provide some support to. And then the other thing that I do is if an employer has sent out an employee survey, you know, as we all know, we get a lot of good information from those employee surveys. And so some of the things that I continuously pick up is, you know, orthodontia for adults is a really, really hot benefit right now. They all want access to it. And in order to put that in a fully insured plan, very, very cost prohibitive. We all know that. The other thing that I'm seeing is that members are looking for really sort of unique kind of benefits. things like alternative medicine and chiropractic, as Bruce alluded to, and things like acupuncture and yoga, and also, products like elder care. Think about what's happening to so many of us today, working from home and having children work there at home, doing their school studies and such. There's a lot of different needs that are facing these employees now. And so the better job we do of sort of getting underneath what those needs are, and then using this wonderful portfolio of benefits that we have access to through Carrington, to bundle those tools and to make those available to our clients' members. And that's one of the reasons why I've had so much success, is because I've been willing to be out of the box, and I've been willing to use these benefits to help my customers provide value, to create savings, and then to drive some unique value to their employees.
Excellent, thank you. So we want to cover some of those examples. We talked about a few on the last slide, but we really like to break them down into these different categories. At Carrington, we've been aggregating these products since the mid-90s. So we have a portfolio of over 150 unique products or product vendors that we work with to really be able to develop custom product packages for employer groups that really fit their needs and not necessarily what we're trying to push and promote. So these savings plans really started in the health industry. As we mentioned earlier, dental, vision, prescription, that combo has been really strong and powerful. Telemedicine has been a huge growth area for not just Carrington, but the industry in general. And I know virtual medical care has really been highlighted in 2020 with the pandemic and the quarantine lockdowns that we experienced last year. That's only continuing to grow more and more. Now, traditional telemedicine, where you speak to a physician, and if you need a prescription as diagnosed by the doctor, sent over to your pharmacy, is a huge value. It is very convenient, and it's been growing like wildfire. Now, some major medical insurance products have a telemedicine program embedded, but you have to look closely at those. If they're charging a consultation fee every time that the employee uses it, then it's not, you really want to look at that additional PM cost, PEPM cost that they're charging through the medical plan to see if it's as valuable, or do you potentially want to turn that off and introduce one that maybe has no consultation fee. What I mean by consultation fee is every time a virtual healthcare appointment is done, the attending physician, it's required by law that they're paid a consultation fee. So the way these plans are structured, sometimes that consultation fee is simply charged to the user, and that really doesn't provide the type of value that you're looking for, as opposed to maybe paying a little higher PEPM so that the employee does not have to pay any consultation fee as they use the program. Also, last year in the virtual world, some other areas that really grew, and I know you've all been hearing about mental wellness and the challenges that our nation has faced in the past, and continuing with everything that we're going through with the pandemic. And so our mental wellness, being able to do virtual consultations from anywhere in the nation with a licensed counselor, has been imperative. Also last year, we saw dental offices close 3, 4, 5 months, depending on the state, and patients were in need of some advice for emergency treatment, issues that they were dealing with, or if they were in a high risk category, maybe they couldn't go into the dentist. So we've also added a teledentistry program, and it's a really growing and big need there. I know that lab costs have become really expensive, especially on a high deductible plan, and so using some lab savings programs has become very popular, along with the next one, Medical Bill Saver, helping to negotiate bills that have already occurred in the past. And those health have been areas have been really strong. The wellness side, Lori and I both talked about alternative health, and these, depending on your demographic base, are all really good programs that provide significant savings. In the lifestyle category, ID theft is always a big topic of conversation, and there are many good programs out there. We have multiple to choose from in our portfolio. I talked about pet care earlier and how that's growing. Tax and finance is a really interesting part of it. Could be financial counseling. So just to help people understand the small things that they can do to become financially free and financially healthy. And then access to tax accountants that can help you prepare your tax. It's great for self-employed groups if you're working with associations. It's a great benefit for employees even, and really adds to a nice portfolio for employers. And then from a servicing perspective, we can handle all aspects of the program, full turnkey, and we also can work with other TPAs and carriers to do some aspects of these services and to work in tandem with an administrator if your employer group is very focused on, maybe they're self-funded, and so their administrator is very important. We can easily work together to bring these programs in. Lori, what do you see as the most valuable and popular products among your clients from this broad spectrum of portfolio that we have in the industries and what's in the industry?
Yeah, Bruce, you did a great job of touching on some of them, but I was just thinking as you were talking, and as I was thinking about how I talk to my clients, again, I go back to one of the great things about non-insurance benefits is I have access to these nationally branded benefits. So on the telemedicine front, I have access to DialCare. On the dental, obviously, have access to Carrington. If you look at vision, I have access to VSP and IMAD, nationally branded products. And then on the advocacy side, I have access to Health Advocate and other providers so that I can flexibly determine based on the individual needs of my clients what products I want to use and how I want to bundle them. So, those are the obvious ones, the telemedicine, the dental, those kinds of things that you touched on. The other thing that's so interesting about this is that it can be done, again, I want to stress this, in a very, very cost-effective way. And so, again, as you are talking to clients, customers, and then thinking about their members, are all looking for ways of, A, providing more value and driving down costs. So I'm always focused on those things. But secondarily, when you start to think about, again, when you're trying to provide some unique products and services to meet clients and members' needs, I really, really think that there's a lot of innovation that we can all take advantage of by just simply sort of exploring some of the other benefits that are out there. And so, again, I mentioned this earlier, but I'm seeing this a lot. In fact, I just put this in a very large self-funded client of mine, the child and elder care benefit. There was a need for that. So I take advantage of that. The chiropractic and alternative medicine. Again, I mentioned that earlier, but again, you have a different kind of member that's sort of coming up to the ranks, really wants to have access to yoga and acupuncture, acupressure. And then again, it's no secret that so many of us are working from home. And so care is becoming a bigger and bigger part of that equation. And so this is a nice way that you can bundle that in. And then ID theft, again, that Bruce mentioned, but I love that ID theft benefit. I'm seeing that more and more. I put it in almost every single client that I have. And when I'm able to do that in a bundle, it allows me to do a better job of communicating to my customers and then down to their members. And think about it from a client administration perspective. Instead of administering a lot of one-offs, I am now able to help them sort of reduce their overall administrative sort of costs and time by putting all these things into one package for them.
All really good points, and you made me think that I should provide some clarity on the services side of this. So these plans can be administered and promoted and offered in many different ways. They can be completely voluntary, what we would call individual retail, where the employee is offered them as a voluntary benefit and they pay directly through our enrollment call center or a landing page that we set up to make it simple and easy, 24/7 available for people to join. It can be embedded in with the open enrollment period and then available after the fact so that it can be done via payroll deduction. It can be offered as an embedded benefit that they don't even have to select or add on. It's just inclusive of the bigger benefits package. So we're very flexible with how it can be made available and how we can service it and how those enrollment processes occur. So moving on, perhaps if my slide wants to move, the value of the discount plans in today's market. So these savings plans have become more popular over the previous years for a few different reasons. When the Affordable Care Act happened, we saw a shift of dental and vision insurance plans going from either 100% contribution by the employer to a portion of it contributed, and so employees were having to pay more of the premium. We've also seen that the individual insurance options moving to voluntary have increased after the Affordable Care Act. And if you look at dental specifically, dental claims in 2020 declined by 34%. Pretty obvious, as we talked about earlier, dental practices being closed for a portion of the year. They simply weren't seeing the patients, but also people still being nervous about going to the dentist, especially in those high risk categories. And as we look at what's occurring with the immunizations and vaccines, hopefully, we will see less than that 7% decline. But the other reason may simply be that employees are choosing not to opt into the PPO plan and choosing these savings plans at a higher rate. Lori, are you seeing this shift in products like dental and vision from employer sponsored to a more voluntary scenario? And if so, how do you see these non-insured products as a tool to help employers, employees, and consultants respond to the shift?
Yeah, actually, as we all know in the consultant world, medical insurance is really the cornerstone of an employer's benefit offering. And when the employer unfortunately finds himself with a significant increase, which seems to happen all too often today, and at times it may be even more than they budgeted, they have some decisions to make. And so what I'm always prepared for is I'm at the ready, because I know that the first things they're going to look at are, what do I do with my contributions towards dental and vision? And they do sort of look at other items as well. But so a couple of things that I do, I look to the dental and vision in particular, those tools as a resource to, again, find that solution. So I might collaborate with the client to reduce the fully insured benefits. So as an example, if they have orthodontia in the plan, I can reduce the premium cost fairly significantly by removing orthodontia, maybe lowering the out-of-pocket max, and then taking some of that savings and then adding in a dental and a vision, or a dental only, depending on what we're trying to do, plan, and reducing the overall cost to the employer, from a contribution perspective. And at the same time, I'm also making a much more robust package. Now, if the customer feels like they just absolutely have no choice but to move the dental and vision to a voluntary offering only, then again, I'm there at the ready with the non-insurance dental and vision plans. And again, to Bruce's point earlier, they come generally at about a third of the overall cost. And so that then becomes, so again, that it gives that employer some flexibility so that they can shift some of that what they're spending on dental and vision to help offset the premium increase on medical, but still be able to provide some very, very valuable tools to their members to support dental and vision that, by the way, don't come with the exclusions that I tend to find and that we all tend to find on our fully insured benefits. So it's just educating that member on the shift and then talking about the value of those benefits over the course of the year to get them, comfortable with using these tools as a resource or as an alternative in that case.
Awesome. One thing I want to point out to everyone who's attending, once we get through the deck, we're going to take some questions from you guys. If you look on the GoToWebinar dashboard, there's a section there that says questions. Please insert your questions there, type them out, and for questions for myself, questions for Lori, questions for both of us, just type those in there, and when we get to the question and answer time, I will start to run through those. Great information, Lori. Thanks for breaking down what you see as far as the shift to these savings programs. And it's all about education. The more that we can educate the HR benefit managers, the consultants and benefit brokers out in the market who are promoting the best benefits for their clients, and that's a huge part of it. And so what we wanted to do is show you here what the value truly is. Look at this savings chart, for instance. We're going to look and dive deep into a dental savings plan as they are some of the most robust because there are so many treatments that are covered at a dental office. So you see some very significant savings here on routine treatments, on basic treatments, on major treatments, and we even include things that sometimes aren't included on insurance plans, like cosmetic dental treatments. And it really gives the patient more flexibility to choose what's best for them, not what their insurance company is willing to pay. And those are some of those alternative treatments that occur where the insurance company, may not be willing to pay for an implant, and instead they'll pay for a tooth extraction. That may not be the best option for the patient for their long-term oral health care. So this is a great opportunity for the employee to choose what's best for them after having a discussion with their dentist. So as we talked about, these plans can stand alone. When you look at the savings that are available, there absolutely is a huge benefit to using a discount plan or a savings plan independently of an insurance option. But there are instances, and we have some clients, and Lori has clients today that are rolling out both a PPO insurance or indemnity insurance or self-funded insurance dental plan, and also on the back of that making a savings plan available to the employee where the insurance coverage is limited, and maybe perhaps they only have coverage for the primary employee and not their family, so a savings plan can be used for the rest of the family to get these great savings. And since these plans are not insurance, there are no waiting periods, pre-existing condition clauses, or limitations. It's really transparent and simple for the patient and the dentist to determine what's the best course of care and when to have that care performed. Savings plans can work with employers of all sizes and any type of employee. We see it with full-time, typically embedded with an insurance product so that they can use the best of both worlds. Obviously, with part-time and seasonal and contract workers, they are typically not eligible for the insured benefit, and so the discount savings plan can be used instead of that for those employees. And then retirees is one of the largest markets. The 65 plus patient demographic that fall into the retiree category are really those folks that need a dental savings plan the most. They're at that time in their life where they probably just lost their employer-sponsored insurance plan, and all of a sudden they probably need more oral care than they've ever needed before, just given the stage in their life and what happens with your oral care over time. These savings can be put in place really quickly, and again, anytime throughout the year. So we don't have to worry about those open enrollment points. Lori, I wanted to ask you here a little bit about these savings and what you're hearing from your clients about how the savings are being received by the employees and what type of feedback they get once they learn about these programs for the first time.
Well, I can tell you that dental, and you mentioned this earlier, that dental is one of those benefits that I get just overwhelmingly glowing feedback on. If you think about it from this perspective, if you are an employee that has access to a traditional, fully insured or self-funded dental plan, let's just take things like cleanings. I know I do, and I find, again, that employees more and more today like to have access to more than 2 cleanings in a year. They typically like to move to 3 or 4. So people really like, that's feedback I get, that says we really like having access to being able to have our teeth cleaned at a discount, out and beyond what is offered by the insurance plan. The other thing that I hear this, and I'm sort of sounding like a broken record, but again, you have a different population of member now who is, as a young adult and even older adults, that want to have access to braces. And so again, the typical plan that we see, unless you're really driving your premium costs up, they're going to cover ortho for, child up to age 19 with a lifetime max of $1,500. So again, what this does, orthodontia, is it gives us the flexibility, the member the flexibility, if they're an adult, to have access to braces and to save on average around $1,200 for braces. I also just talked to a member yesterday, as a matter of fact, who has a fully insured plan, found out that they needed to have $8,000 worth of care. Their plan max was $1,000, and we had a very good conversation about how these benefits would be able to significantly offset the cost of the work that they would need to have on their crowns. She needed 4 crowns as an example. And so, man, the feedback that we get, again, in particular on dental, is glowing all the way around.
That's great to hear, and we hear the same thing, on our side. The employees, I've heard some horror stories about issues with the amount of treatment that they need from a dental perspective, and their inability to use their dental insurance plan due to maximum. So it really is, again, an educational process for the market. So we've talked about the benefits of these savings plans, and we've talked about the different types of savings plans. We're going to stick on dental for a second to make this illustration a little bit easier. But what is the experience like for the employee who signs up for one of these programs? So in this example, we have a part-time employee who is not offered traditional insurance through their employer. The employee has talked with a dentist, received a treatment plan, and they need quite a bit of treatment performed in addition to their normal preventive care. But it's very expensive to pay full fee at a dental practice. So what does she do? Her employer has an option available where she can buy a dental savings plan through Carrington, let's say, and they purchase a Carrington dental savings plan. Once they sign up for the program, they receive a welcome kit that includes ID cards and an online provider search so that they can find the dentist nearest them, and they may have an existing dentist and they're hoping that they can find that the dentist already accepts the plan, and they contact that participating dental provider to schedule an appointment. When the employee arrives at the dental practice, they show that ID card that has all the pertinent information that the dental practice needs to determine that they're eligible for the savings, and that which fee schedule to charge them according to. So they know immediately, depending on the treatments that are needed, what the cost is going to be. And then with our standard dental savings plan, that employee is going to save anywhere from 20 to 60% discount off of the dentist's normal or full fee. And that's just standalone savings plan, no insurance involved. Very simple, very straightforward. If they have any questions, of course, there's a call center available to help them with any issues that occur. Now, another option that we're talking about, of course, is using a savings plan, potentially with an insurance plan, or more aptly put, when the insurance plan doesn't provide coverage or the benefits. So it's not something that the employee would go in and show both ID cards, and they get the best of both worlds from that perspective. That sort of coordination of benefits is not something that we're saying here. The way that it works really well is when there's a waiting period on the insurance plan, for instance, and they need that root canal and crown, but they're new to the program and they have to wait 6-12 months to get it done. Well, I don't know about you, but if my tooth is hurting, I'm not going to wait until insurance can cover that. So a discount plan could be used right there immediately to allow that employee to go ahead and have the treatment performed at the time that they need it, and to not have to pay full fee at that dentist. There are, of course, things that aren't covered by the insurance plan. We talked a little bit earlier about cosmetic items, implants, for instance. Is there a medically necessary need to place an implant versus doing an extraction and doing a partial, let's say? That's a big challenge, and it's an extremely expensive treatment. And then there are things like orthodontia, which of course sometimes are included on a rider and sometimes they aren't with the insurance plan. Once the employee has reached their maximum for the year, then they can start using the discount plan to ensure that they're not having to pay full fee, and they don't have to wait until next year when their coverage renews. And then with indemnity programs, and indemnity insurance is typically one where there's either no network incentive, meaning in and out of network benefits, or there's a passive network arrangement in place, and the policyholder is due a specific reimbursement on a per treatment basis, regardless of what provider they see. So in that case, maybe there's not a provider network used, or they want to stick with their dentist who isn't on the insurance network. And with that indemnity, it'll help stretch that money further, and they can go to a discount, a savings participating provider to get that discount before the indemnity schedule kicks in for reimbursement. In this particular case, Lori, can you give us an example of where you've successfully placed a dental savings plan alongside a fully insured plan that your employer was using?
Yeah, so I have another self-funded client, got about 1,100 employees, and they're in the technology space. And so, they're really all about, it's a very, very competitive space. So they're vying for employees. And so one of the things that they came to me with is, how do I make my dental program more robust? And in this particular case, it was a self-funded dental product as well. And so what we did is we just simply layered in. So the benefit was provided, fully insured benefit was provided, employee only, the contribution was for the employee only. But then, and it was a very, very nice plan. But then what we did is we sort of mitigated or reduced some of the benefit in the fully insured plan, things like orthodontia and stuff like that. And then what we did is we added the savings plan alongside of it. And then what the employer did in this case is on the savings plan, they included all family members, so that they could then again speak to the creating a more robust plan, using it as a way to go out and help them attract and recruit talent. And again, what it does is it just kind of creates this much bigger plan, if you will, with a lot more bells and whistles. So, you know, things that I've mentioned before, orthodontists for your adults, discounts on services that are not covered, discounts on services once the plan max has been met. And then the other sort of kind of side kind of benefit is if and when you get that member to use this plan versus their self-funded dental plan, the claims don't hit the plan. So that's just an added benefit, you know, that I haven't really touched on until now. And I'm telling you, they're so happy because when we pitch it to them and to the employees, we show them together. We show, here's your fully insured benefits, here's your non-insured benefits, and here's how they work together.
Well, that's a great point, especially on those, you know, waiting period example that we talked about earlier. You know, that's an incentive for the employer to offer these savings plans in that case for two reasons. It provides that opportunity for the employee to get the treatment done now when they need it, and two, it doesn't impact their claim spend on the employer side, especially if they're self-funded and have waiting periods. Really, really good point. So again, trying to illustrate here on this slide what it really would look like for a patient to use both of these plans. So I've had conversations with employees of a major airline where this exact example was described to me from a flight attendant who was maxing out her benefit, her and her family. And so she was going out of country to have treatment performed because she couldn't afford the full fee, and they didn't want to wait until coverage happened the next year. And so that kind of story helped us implement a savings plan alongside it, and it works great for employees that have that particular need. So the first visit, this employee uses their insurance plan, dental insurance plan, and they have treatment performed, and the amount of that treatment reached their $1,500 annual maximum just in that first course of treatment, which is not an impossibility in any way, shape, or form, depending on the type of treatment. So step three, that same employee then purchases a dental savings plan because they know they have additional treatment that needs to be performed. Now, the step four, that patient visits the dentist again and they say, hey, I now have this savings plan. What would my cost be if I'm not having to pay your full fee, and now that my insurance plan has been maxed? So you can see here down in the bottom right hand corner the regular cost of, let's say the next treatment performed, they need a root canal, they need 2 composite fillings, and they're going to crown that tooth that they had the root canal therapy performed on. Based on national averages, the cost of that, if you were paying full fee, would be $3,432 for just those 4 procedures. With our Carrington dental savings plan, those same exact procedures would be just $1,572. So they're almost saving $2,000 in the course of one treatment. They're almost saving more than their annual maximum on their insurance plan. So these savings are real, they're tangible, and they're very transparent to the consumer to see the value of them. You know, these plans can be anywhere, if you're buying them direct to consumer, these dental savings plans, maybe $10 a month or $100 a year. And if it's offered through an employer through the voluntary program or embedded, we get down to wholesale rates that are much lower, potentially half the price of what an individual plan costs directly. So this hopefully really illustrates how it's truly being used today, even though some of you may have not even seen this in place with an existing client. We talked a little bit about orthodontia earlier. That's a big topic because of orthodontia being one of those benefits that an employer has to decide, do they want to include? It's not just typically included. So nearly 4 million children undergo ortho treatment in the US every year. There's 1/3 of all ortho patients are adults. That's becoming more and more popular, not just because of braces, but because of these new clear aligners, which are very popular and much easier to manage and requires less maintenance. Coverage for adult ortho is also not included in many plans like we've been talking about. And if you do add that ortho benefit as a rider to the insurance plan, it can increase. It sometimes increases as much as 15%. It's a huge point there. And so if you look down here in the bottom right-hand corner, the average cost, again, looking at usual typical fee, full fee that's charged across the United States, it averages out about $6,000 for basic braces. And at a 20% discount, which is what the Carrington savings program offers, whether it's performed by a general dentist or a licensed orthodont, ortho, is 20%. So $1,200 savings, $4,800 is really impactful and helpful to the employees. Lori, I know that you have used these savings plans with your clients. How do you help an employer assess what's the best route to go for them with an ortho benefit, whether it's adding the ortho rider through the insurance program or using a savings plan instead of spending that additional premium dollar to cover orthodontics?
Well, it's always our job to give our clients options. If I'm asked for a recommendation, my recommendation is always to remove orthodontia out of the fully insured benefit and to add a non-insurance dental savings plan alongside of it, just because of, again, you're taking that money, you're adding more value to the overall plan, you're getting access, bigger access to a better benefit, so adults and children, no limits, no maximums. And then you're also at the same time then adding all of these other benefits in addition to it. So if I'm asked as a consultant which direction I would go, that's the path I take.
Got it. Great. Thanks so much, Lori. So a fun topic to talk about. How about revenue? How about commissions? How does this impact all of you as consultants and brokers and what you're selling? This is a great example here, of a self-funded customer with 1,100 lives. Lori, what do you see as the biggest benefit of introducing non-insured products like dental to a self-funded client? And can you break down this pie chart here for us about the value of non-insurance benefits to the employer and the consultant?
Yeah, so I thought it would be helpful to my fellow consultants on the phone to sort of give you a snapshot of what happens to commissions when you include non-insurance benefits as a part of your sales process. And so in this particular case, it was, it's a little bigger than just dental. So what we did for them, again, going back to what I do with my clients is I look at what their wants and needs are and then kind of fill in the plan gaps. And so in this particular case, we added several benefits. We used a telemedicine with a 0 consult fee. We pulled out the telemedicine from the self-funded plan. So we saved the admin fee on the telemedicine, and by using telemedicine outside the plan, we drove those claims away from the self-funded plan. We also added mental wellness because mental wellness was an increasing concern for this client, along with dermatology, again, because of so many of us working from home, giving them a broader access to a bigger benefit. I also have an HRA with this particular client, and so the member doesn't really have access to a good lab benefit until they reach their deductible, so we added a lab benefit. And then we also did imaging, prescription drugs, and an advocacy benefit, again, to help the member do a better job of managing their overall plan, finding specialists and so on, and then being able to get their questions answered around bills or costs or getting out from under some of those fees. So, and when we did this, I wanted you to kind of see sort of how the pie chart breaks down. So on the right-hand side, this is a consulting arrangement. Obviously, no surprise to anybody that the bulk of the fees for us in this case come from consulting on medical, dental, vision. And then you have the other usual suspects like short and long-term disability and group and voluntary life. And then we also added things like identity theft, which is a small part, and then ancillary benefits like critical illness and pet insurance and things like that. But then if you look at the bottom left-hand corner, non-insurance benefit makes up 20% of the overall revenue pie for me in this particular case. And this, again, remember, is on a low ring benefit. So this is being sold to this client at under $15 PEPM. So it's a great strategy. I'm all about win-win. I like for my clients to win, the members to win, and if we can also win in the process, it just makes for a better long-term situation with a client. So I just thought this would be helpful for you to see this, because I think so many of us miss the boat by saying, oh, I don't have time for that. I'm just going to sell the things I normally sell. You really need to think about including non-insurance benefits as part of your strategy.
And the nice thing about the non-insured benefits, at least with Carrington, is we pay commissions out, in perpetuity. So as long as the business and the group stays in force, you continue to earn that revenue over and above itself. And so, diversifying and having this nice 20% chunk of additional products that you might not have had a decade ago is really important to your consulting firm. That's great. Lori, what about fully insured? What does that look like?
This is just another example on a smaller scale. I thought people would like to see. Again, this is 45 lives, so it really works. It doesn't matter the size of group, self-funded, fully insured. Again, this is a client of mine that's they sell annuities. He wants to be generous to his employees. And in this particular case, he wanted to give his members and their families access to telemedicine zero consult, even though it was in the health plan. He also loved the idea of advocacy to provide more of that concierge support, so his members did a better job of using the plan and then having support with questions on bills. And then the usual things like more help on RX and labs and things like that. And so in this particular case, now I happen to have a good year with them because I was able to sell a really nice individual disability policy. But we all know that those commissions are heavy up front and then they tail off. But if you look again, after you get past medical, non-insurance benefits is 12% of the overall revenue pie. And so my revenue would be reduced by that amount had I not had that in. And it's not something you have to touch. It's not something that increases in cost every year. So it's just like keep on keeping on, educate the member, and when the member has a good experience, they tell their employer, and we just keep going down the road. So it fits regardless of whether it's large client, small client, fully insured, or self-funded.
Perfect. So next steps as we kind of wrap up here, Lori, how did you get started, you obviously learned about how these plans work, and, you're probably so used to more traditional products, how did you determine what you should be selling in this non-insured savings plan bucket? Tell us a little bit about how you get started introducing these products to maybe an HR executive who's never heard of them, and where and when should the consultants and brokers be selling these products?
Well, I mean, there's so many opportunities. It's kind of a loaded question because, as we've kind of talked about, you can sell it to employers who have part-time employees that really don't have access to anything. It can be sold on a voluntary basis and be generating revenue for you as a consultant all day, every day, and providing value to the members. It can be sold along fully insured. It can be, I mean, they're really just the sky's the limit. And I think as kind of a first step, I mean, you just have to be willing to dig in. And for me, I was all about differentiation. I wanted to be different than my competition. And so I just jumped in with both feet and I started learning about the benefits. And then I just started Making moves at selling, just selling. How did that work? If it didn't work, why didn't it work? And while it's certainly not going to work for every single customer, I pitch it to every single customer that I sell or a prospect, and in a very, very large percentage of the time, they buy it. So I think it's just jumping in, using your Carrington partner as a resource. They have, they're a wonderful resource to help you kind of understand how to sell these benefits. Ask the right questions, just get yourself sort of comfortable with the benefits and how they work, but you just got to jump in.
All right. So we have kind of come to an end of our time today. If you attended today and you're not working with Carrington today and you want to learn more about our programs and how to get started with that, visit consultantbenefitsolutions.com. Here's my email address and my phone number. I'd love to hear from you. If you have any questions, if you want to learn more, have a conversation, contact me at any time. Lori, thank you so much for your time today and imparting this wisdom to us and the audience. You have done an amazing job of educating the marketplace and providing real value and benefits to your employers, helping them save money, helping their employees save money, and help them recruit with some non-traditional benefits that are really exciting and important in the growth of the industry. Thanks everyone for joining. Lori and I really appreciate your time and would love to hear from you.
Thank you.